Welcome to the Full FX Unfiltered. My name is Colin Lambert. I'm publisher of the Full FX, and this edition is in association with JP Morgan. And I'm delighted to be joined by Kate Finlayson, who is Global Head of Market Structure and Liquidity Strategy at JP Morgan. Kate, lovely to see you.
Thanks, Colin. Great to be here.
We are speaking on I guess it's just a couple of days after the 2024 e-trading edit was published. For me, it was quite an interesting edit this year, actually, because there was a few things I wasn't expecting, perhaps workflow and processing being as important as it were. But what were your observations, key observations around this year's survey, and what are you hearing from your clients?
Yeah, it's an interesting one. I think when one looks at the volatility, concerns around volatility, availability of liquidity, those are elements you can't necessarily predict. So it's more reactive. Yeah. Whereas workflow efficiencies is something that you can actively solve for. You can take proactive steps to streamline workflows, reduce costs, automate execution, data analysis, all those good things. So that was encouraging to see, but perhaps not that surprising.
I guess for me, I always look at it and think volatility and liquidity have always been towards the top of dealers' concerns. Yeah. Back in my dealing days, what did I worry about was liquidity. So do you think, the big event of this year, it seems to be, is going to be the T+1 switch in US securities markets. Do you think that may have had an influence this year in terms of people's concerns? Absolutely.
I mean, it's definitely a factor. If you think about all the processes that need to be expedited and for that to arrange on T, plus the impact, the survey went out to 65 different countries. So while we have, our clients, market participants in general, looking at readiness within the US and North America, it's, T+1 is broader than just the US. But as they're dealing with it, the impact for non-US asset managers, whether that's Asia, whether that's Europe, is significant. So all of those processes need to be expedited. And when you think of how they talk about T0, and there, of course, distributed ledger technology, blockchain, efficiencies, etc. So kind of go hand in hand, but it is a big operational undertaking for sure.
Yeah, and it seems to me the industry is actually looking to find the solutions. You mentioned blockchain there, for instance. They're looking to find solutions for this sort of workflow and efficiency gains that we're seeking.
Yeah, absolutely. I mean, I think some of the challenges is the infrastructure around that, right? So if you have multiple custodians, because of course, CLS requirements in terms of cutoff times and all of these, there are so many different elements within this that are outside of the direct control of market participants. Hence the huge amount of work that goes into it, coordinating, understanding, and preparing and thinking about what is the comfort level with automating some of the processes.
Another factor in the survey which I thought stood out for me was data and automation becoming much more important. It's kind of something we've seen in foreign exchange, but actually across the asset classes, there was quite some interesting findings there. What stood out for you in around that data and automation area and what's going on there?
Yeah, I mean, I think that was, again, perhaps not that surprising because we have market participants that have been looking to see how best they can aggregate pre-trade data to help with price formation in terms of where best to go for liquidity and, pre, at and post-trade analytics as well. That's involved with respect to the use of more automated forms of trading like algorithmic trading. Yeah. So we see that, manifesting across a number of different asset classes. I can touch on some of those briefly. So rates, developed markets, obviously US Treasuries, we see an increase in direct streaming of US Treasuries. We see a pickup in algo usage and also from a streaming perspective in algos, how do we move from on the runs, 7 olds and beyond actually to off the runs. EGBs again streaming there. All of that just data provision to help with price formation and efficiencies. EM, very interesting there in terms of some of the trading techniques that we see emerging. Obviously, market participants looking to gain access to less liquid markets. Yeah. And on the rate side, so interest rate swaps, there where we've seen larger size trades done electronically, as well as trading protocols shifting in certain markets from request for quote to request for market, so two-way two-way prices, which is very interesting.
Certainly the rise of automation and electronification across the asset classes I found very interesting in this this edit, because as an old FX person, I do acknowledge other asset classes occasionally, only occasionally. Yeah, I mean, I was actually quite surprised that, how, for instance, commodities was really sort of taking off in terms of electronification.
Yeah, absolutely. I mean, previously it's been around base metals, but now increasingly more green energy. So when we look at the EU emissions trading system, so EU ETS, EUAs, a great focus on there, but also beyond emissions trading, where you have precious metals, so bullion, where there's gold options, gold ETFs, we see increased electronification there. And beyond that, even within esoteric commodities complex, we see more on-screen trading emerging. So very exciting space in commodities.
It is, because I think it's, a lot of people think the e-space is mature, and this clearly indicates to me that there's a heck of a lot more we can be doing, or will be doing, with it over the next couple of years.
Absolutely.
Yeah. It's, you mentioned direct or streaming prices in these markets. Direct connectivity also clearly plays a big role. It's kind of something I've been highlighting in foreign exchange for some years. If you look at the BIS surveys and the the semi-annual surveys, they show more bilateral trading. It seems to me this is happening in other markets as well.
Absolutely. So FX, for sure, streaming protocols have been in existence for some time. But we have, as I mentioned, this pickup in US Treasury direct streaming, which is increasingly also progressing into more, whether that is on the runs into more off the runs, EGBs, again, as I say. And there we focused on bilateral direct streaming, actually in the full depth of the order book. And there, from that perspective, the direct streaming, whether it is US Treasuries, EGBs, FX, it's about elements of internalization, elements of reducing market impact, so information leakage associated, and that is key. So for us, if we can provide that direct stream, and for clients, just take even outside, when market participants are looking to aggregate all this pre-trade data, they're looking to have multiple pricing sources. They're looking at options where there is an internalization or there is less market impact, so that they have that very good understanding and a pre-trade perspective of where to go for that liquidity. And then, of course, when you have these direct streams, where we can differentiate pricing off venue, because we're not incurring brokerage costs, then obviously what we're doing there is providing our clients with all the data they need to make the decisions on their side to suit.
The theme of this is greater automation and electronification across markets. What is JP Morgan doing to help clients with that transition?
Well, we think about some of the responses in the survey, the availability of liquidity being top of mind for our clients. So reliability of liquidity is a key tenet in all our solutions. And then it's about expanding, developing from there. So streaming of US Treasuries into more products off the run and so forth, looking at EGBs, as I say, bilateral direct streaming of the full order book depth, and also then looking at FX development. So algorithmically as well, the development of algos. So not just your TWAP, VWAPs, but also adaptive, which reacts with market activity. So more sophistication there. So as the algos develop as well, you then have pre, at trade, and post-trade data to analyze the performance of those algos and provide clients with all the data points that they need. Ultimately, it's just about continuing to develop, continuing to provide as many solutions as possible to suit the needs of our clients.
I believe it's in our contract we have to talk about AI and machine learning in 2024. Any interview I do, I'm not sure, but yeah. AI and machine learning actually it's been a key part of the edit for some years now, but actually this year hit a new high in terms of people that think is actually going to be influential in the coming year. What's happening around that sort of those new technologies? not so new technologies now, probably.
Yeah, well, I mean, AI certainly has been newsworthy recently, and a lot of focus on it. But if you think about it, the application of machine learning has been around for quite some time. So where you have artificial intelligence and looking at that, when thinking about it, that, of course, the development, the tech investment leverages quite a bit in terms of data capture, electronic trading within that scheme of things. At the moment, AI probably allows for, in the space of more effective price version, sentiment analysis, productivity tools, in terms of code generation and so forth. Perhaps not so much in chatbots at the moment, but it's a very exciting space in terms of what it can be, in terms of the developments around that, for sure.
It does seem to me it's still fairly early stages in terms of what it can probably achieve in a market environment. I look at it and say, well, I'm not quite sure that I want to entrust AI to all my trading at this moment in time, but these things advance.
I think the element of control and the element of more of a risk-based approach to that is probably quite useful.
Yeah. I guess in a throwback to 2023, we can't also not talk about regulation.
Oh yes.
Which I'm sure you've really enjoyed over the last couple of years.
It's kept us busy.
Yeah, I'm sure it has. It's even kept me busy, which is quite remarkable. I mean, obviously regulation did feature, but there were variations across the asset classes in terms of how concerned or how big an impact respondents thought this would have.
Yes, it was interesting to note that commodities was up there in terms of focus. We could be here all day. I'll just mention a few that probably sprang to mind, which is resulting, aside from the fact, obviously, the survey was completed by traders in 65 different countries.
And 4,000 of them as well.
4,000.
That's a lot of.
That's another observation I thought was remarkable.
Yeah.
I think when we look at the fact that across all those different locations, there may be where you may have regulators that would impose particular trading limits, volatility control mechanisms like derivatives exchanges. That is obviously something that could be sparking that particular concern, but there's much more. So commodities actually sits within the framework of much broader frameworks, like MiFID II. And so post-Brexit, wholesale market review, etc., where we've had the FCA take a look at what is the regime around position limits for commodity derivatives. How does that function? How do trading venues get involved and so forth? So that is currently underway. Plus we have the same review in the EU. The US did this a few years ago, but an interesting one in the US, the CFTC has got new block and cap thresholds which come into play for commodity swaps as well as other asset classes in July. And then you have energy, not to forget the regulation on wholesale energy markets, integrity and transparency, and it involves tech change, operational uplift, legal requirements. It also encompasses algorithmic trading and for the first time looks at physical commodities, so spot and bilateral physical OTC markets. So a lot going on there. Plus then you have emissions trading, so compliance markets and EUAs and everything that's going on there. Precious metals. We even have the Financial Market Stability Board looking at what frameworks can be used that can be leveraged for precious metals markets as well. So quite a bit just in the commodity space, hence maybe the tick in the box there.
Yes, and I'm also thinking to myself, you've just told me I'm going to be writing about regulation for another 2 years. I'm not quite sure how I feel about that yet, but we'll get round to it. I mean, they were actually focused regulatory concerns. Are there wider trends that you think are emerging?
Absolutely.
That we should be aware of?
I mean, I think there's always been a focus on transparency and the like of that type of focus from regulators. I think trend-wise, we've had for some time, recently specifically, around the cost of capital requirements. So that is where we've had prudential frameworks in place, the rollout of Basel III reform and the implementation, recent proposals from US agencies which could be particularly significant. Yeah. I must say it's not just look at the cost of capital requirements as the regulators also assess where there have been particular elements of dislocation and particular elements of volatility, what is going on in the non-bank financial intermediation sector. Yeah. And that's really interesting because that looks at everything from liquidity management tools to actually the use of leverage in the system and margin. So this is the full gambit in terms of money market funds, open-end funds, hedge funds, and the use of leverage. So the FSB, the book of work on that, is going to be really interesting as that develops. But that is a particular trend which is noteworthy. And then, of course, one looks at the developments with respect to margin, CCP, the clearinghouses, recovery and resolution margin again coming into play. And then not to leave our friend AI out of all of this. We just had the European Union members agree their Artificial Intelligence Act, and that's sort of one of the biggest first frameworks, very broad, but extending across the use of AI. And the CFTC has a request for comment on the use of AI in regulated markets. So quite a bit going on there.
Well, I guess, there's quite a lot in terms of development, as we've already discussed, and as the edit actually shows. So I guess it's inevitable the regulators do have to pay attention. It's probably nice to actually see the regulators trying to get in front of it, maybe. Yeah,
well, it's a question of staying in lockstep or catching up or, ensuring that the use is for good, and that there are appropriate controls and oversight in place. So that, because it's obviously developing at pace and obviously a lot of potential, but just what are the controls that need to be put in place there?
So just to close out and to put you on the spot, probably my number one observation from the edit in 2024 was, and I say this with a tear, that foreign exchange is no longer going to be the most automated asset class in 2025 if the traders' predictions are correct. It will actually be third, after commodities and rates. Sorry, yes, I'm glad one of us. But that's what stood out for me, was actually how the other asset classes are really caught up and may only just outstrip foreign exchange. What would be your sort of key takeaway from the 2024 e-trading edit?
Just to comment on the FX piece there. Obviously FX is more advanced. It is, certainly a bit more commoditized in terms of the data that's been available, pre-trade, at-trade, post-trade analytics, the use of algos, and we see that increasing. So obviously comfort levels there increasing. And there we have development of the types of algos that can be used and the data that's available to assess. So I think FX is still, spot FX, just to mention, is the obvious, the NDF algos as well. Yeah. And then looking at FX options, there we still see predominantly, around 90% in terms of tickets still happening on single dealer platform. Yeah. And so that still is very much the main mechanism. But FX is continuing to advance, and so it's absolutely hasn't stopped its progression.
Very glad to hear that.
Oh, the other thing I wanted to just quickly say is, for me, just on a holistic basis from the survey, is that just, you mentioned 4,000 traders. The reach, the number of traders that have participated across all of these different asset classes, no longer, as you may say, the FX story, but the engagement across asset classes in electronic trading. And the use of platforms and different forms of electronic trading, for me, was the standout observation from the survey.
Yeah. And I guess it's nice, actually, having spoken to you now, that, yes, whilst there's going to be some sort of homogeneity come from the increase in electronification across asset classes, they all do have their nuances still. So actually, there's still that opportunity to differentiate and innovate in individual asset classes, which I think is quite nice to hear.
Absolutely.
Kate, something else I thought was quite interesting in the survey was the respondents' opinions on what makes a good platform. There was obviously data and analytics. User-friendliness was quite important, which is something I've been very keen on over the years. What were your observations around that? And also, I guess, does this highlight the benefit of a single dealer platform?
I think when one looks at some of the benefits that they look to achieve from using a platform, that depends on what technology they're using to interact. So if it is with the GUI, if it is direct, then clearly the user friendliness of the platform is going to be key, so that they can actually interpret what is going on. So that's understandable. Where you have market participants that perhaps are aggregating or have API connectivity and are looking to almost in a way form their own club, customized club, then getting that data in will be absolutely pivotal. And so to the extent that they can get data that is usable from those platforms, then clearly that facilitates that analysis that they need in order to make the best informed decisions from an execution perspective. And that is something obviously, on JP Morgan markets and execute, and that is a key functionality that we look to achieve and always constantly evolve.
Certainly, I must admit, from my point of view, that interactivity of Execute in particular, which is the platform I know best, has always sort of demonstrated the value of a single dealer platform. Because there have been questions over the years about do we really need them, but I think when it comes to actually trade planning, for want of a better word, I think it still can't be beaten.
Absolutely. When you look at the fact that you have less information leakage, that we have all of that JP Morgan liquidity sitting there, it is another tool in the toolkit, but fundamentally still prevalent for some asset classes and very, very useful.
Yeah. Kate, fascinating as ever. Thank you very much for your time today. Thank you everyone for watching, and we'll be back again very soon. Thanks a lot.